Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the small business community. All right, so one of the things that's going around these streets is just people being upset about the change for the 1099-K requirements. Now, prior to 2021, and actually starting in January 2022, the 1099-K requirements are changing. Prior to that, the 1099-K reporting requirements was 200 transactions and $20,000. You had to cross both of those thresholds for third-party payers to issue a 1099-K. That has been changed starting with 2022, so starting this year, where it's payments over $600 are going to be reported on the 1099-K. And so a lot of people I have seen in these social media streets that are politicizing this, but I really want to give you the history of where this comes from. So this was not a Biden issue. This is not a Trump issue. This was going to come regardless of who was in office. And I talked about this when it happened, but I couldn't find the video. Maybe I never even put it on YouTube. I have no idea. But so here's what happened. So TIGTA is the Treasury Inspector General for Tax Administration. This is an independent administration and an independent agency that's designed to review tax policies to essentially make sure they're fair. They are there to ensure the integrity of internal revenue laws. Now, they issued this report in December of 2020 that talked about this audit they did. So the TIGTA audited tax year 2017. Now, if you know anything about IRS audits, it generally takes about 3 years-ish to get to those tax returns. So returns that were filed for 2017, which would have been in 2018, those we're not going to be getting audited until 2020, 2021. Okay. So, but TIGTA did this audit, okay, for tax year 2017. And here's what it says. Numerous business and individual non-filer taxpayers with Form 1099-K income were not identified, and cases were not created by the IRS's non-filer programs. And in other cases, they were not identified. They were identified but not worked by the IRS. TIGTA identified that 314,586 business taxpayers with $335.5 billion in Form 1099-K income that appeared to have a filing obligation but were not identified as non-filers. This is a problem that the IRS cannot use third-party information returns, such as the Form 1099-K, to identify business non-filers and create cases if the taxpayer's accounts are not coded as having an open filing requirement, or no tax account exists because the business has never filed a tax return. Now, it also says the IRS does not identify all individual non-filers with significant 1099-K income. TIGTA identified 62,087 individual non-filers with $575 million in Form 1099-K income who the IRS had not identified as non-filers, and non-filer cases were not created. While the IRS cannot work all non-filer cases it identifies due to resource limitations, TIGTA identified a significant number, 325,000 business non-filers, 103,000 individual non-filers with $203 billion and $3 billion in Form 1099-K income respectively that were not selected to be worked. Okay? So essentially, TIGTA did the homework and said, hey, IRS, y'all are not identifying these non-filers and you're losing money. So how much money did TIGTA identify they were losing? So in tax dollars, we're looking at roughly for individuals $28.35 million in potential tax dollars. And so this is where this comes from, right? Because this independent organization went and did an audit because their goal, of course, the IRS's goal right now is to close the tax gap. The tax gap is the amount of tax dollars that are owed versus the tax dollars that are collected. So the difference between the two is the tax gap. And so the IRS is concerned, and so is the government. Okay, let us be crystal clear. The IRS is essentially the police. All right. Congress writes the laws. It's the IRS's job to enforce the laws. All right. So the IRS's goal is to close this tax gap. Like, hey, where is this tax money? Well, 1099Ks are one of the spots. And listen, I have seen it in these streets, okay? Because y'all come on social media, on Facebook, Instagram, all of this, talking about the stuff that you do. One of the things that you were doing is structuring. Okay, structuring is when you intentionally you structure your payments, your earnings, like with these third-party third-party payment sites like a PayPal or a Stripe. When you started getting close to $20,000 in 20 transactions, you just open another account and use a separate account. That's actually structuring, okay? And structuring is illegal. Okay, so you were already out here in these streets saying what you were doing. Please learn to keep some stuff to yourself. All right. But the anger seems to be where people are concerned about, family money, like when, a family sends you money on these third party sites, like, a Cash App or Zelle and all of those things. So here's the thing. You can explain when family gives you money. You can explain that. But when you have 200 transactions and $20,000 or 200 transactions and $15,000, that's a whole bunch of family giving you money, right? So the financial footprint of people running businesses illegally, when I say illegally, meaning that you are using these third-party sites to hide a business or getting business income so you don't have to report it. Okay, the trail of that, it says it all. So when you follow that, that's going to look more like a business than it is going to look like people, like family or friends giving you money. Like, you got a lot of generous friends, right? So this is what why I wanted to address this, because folks are, taking these posts and, coming up with all of this rhetoric and like, oh, they're just trying to come take our money. The people that you need to be angry at are the people who are breaking the law, not the government changing the law so that you can do what you're supposed to do, because all your income is supposed to be reported anyway. That's it. That's the law. It's not all income over $600, whatever. All income is supposed to be reported. That's the law. And so then what have people been doing? And you've seen it. You've seen people with businesses send me Cash App, send me Zelle, send me payments, friends and family on PayPal and all this other stuff. Listen, and when those payment processors find out that you're doing that, they will shut down your account. It is actually in their terms of service. And I know because I read them all. Yes, I'm a geek like that. But I wanted to, but this is how I can tell you how you're violating their terms of service. Most of the time, people don't read the terms of service. You just go through and click, go ahead and open this account, not reading the rules. Okay. And so this is why I wanted to address this 1099K thing, because it was already coming. There were a couple of states that had already reduced those reporting requirements. I want to say Massachusetts and Vermont were the top two that come to mind, because I happened to be living in Massachusetts when that happened. And I got a 1099K from PayPal. And I was like, wait a minute. I knew at that point I had not had 200 transactions or $20,000 on PayPal, but I got a 1099K anyway. And that's what prompted me to go look and see what was going on. And so now TIGTA, the Treasury Inspector General of Tax Administration, They did it. They did the audit and found where there is unreported income, and that means unreported income is unpaid tax dollars. And so if we're going to be talking about people paying their fair share, well, if you're not reporting your income, you're not paying your fair share either. But you worried about, all billionaires and all of that stuff. This is evidence that everybody ain't paying their fair share. Because if given the opportunity, you're going to try to find a way to skirt paying taxes. And like I've told y'all a million times, nobody likes to pay taxes. I don't like to pay taxes. Nobody likes to pay taxes. But that is the cost of living in this country. Okay, so I will also share the link to this report. So if you're a geek like me and really want to see what they came up with, then take some time to read, because when you're following these type of things, what's going on in the administration, the stuff that doesn't make the headlines, this is when you find out what's going to happen or what's coming down the pipe when it comes down to taxes and anything else related to your industry. Start following the policy type things, then you'll find out what's going on. So yeah, this was going to be happening regardless of who was in office, because listen, if both major parties did not agree on this, then that bill wouldn't have passed. So this ain't just one party. It just happens to be one party that it's on their watch. But both parties had to agree to this, or else that bill wouldn't have passed, or it would have got taken out the bill. Okay. So yeah, that's how it got here, you guys. So I hope that gives you something to think about, something to chew on, like really understand how this policy is happening. Because listen, we spent a whole lot of money over this past couple of years with COVID and all of that. That money's going to have to be made up. That it may have seemed free, but the money is never free. Never free. Okay, so thank you guys so much for tuning in, and I will see you all next time. Bye.